What if the Fed's next decision could make or break your crypto portfolio? Hey everyone, welcome back to the channel. Today, we're diving deep into a topic that's on every crypto investor's mind, the Federal Reserve's next move. With inflation still a hot topic and the economy showing mixed signals, the Fed's decision on interest rates could be the catalyst that changes everything. In this video, we'll break down the challenge, understanding what the Fed might do and how it could impact your crypto holdings. We'll explore the problem, the historical patterns, and the strategies you can use to navigate this uncertain time. So, grab your coffee, and let's get into it because this is information you absolutely need to know. Here's the core issue. The Federal Reserve has been on a path of quantitative tightening, raising interest rates to combat inflation. But now, with recent economic data showing signs of a slowdown, there's growing speculation that the Fed might pivot to cutting rates or even pause its hikes. This uncertainty is creating a volatile environment for risk assets like crypto. In recent days, we've seen Bitcoin fluctuate wildly on every hint of economic news. The problem is twofold: if the Fed continues with high rates, liquidity tightens, and investors pull money out of risky investments like crypto. On the other hand, if they cut rates too soon, inflation could surge, leading to a different kind of crisis. This puts crypto investors in a tough spot. Do you hold on and risk a further drop, or do you sell and miss out on a potential rally? The fear and doubt are palpable, and many are wondering if this could be the end of the bull market or just a temporary setback. The uncertainty is the real enemy here. To understand where we're headed, let's look at history. In the past, when the Fed raised rates, crypto markets often suffered. For example, in 2022, the Fed's aggressive rate hikes coincided with a massive crypto crash, where Bitcoin lost over 60% of its value. But it's not always doom and gloom. In 2020, when the Fed slashed rates and pumped liquidity into the system, crypto exploded. The pattern is clear: crypto thrives on cheap money and abundant liquidity. So, what's happening now? We're at a crossroads. The Fed has been hiking, but recent economic indicators, like a cooling job market and slowing consumer spending, are suggesting that a pivot might be on the horizon. The market is pricing in a 60% chance of a rate cut by the end of the year. But here's the twist: even if the Fed cuts rates, it might not be enough to offset the effects of quantitative tightening, which is still draining billions from the financial system each month. This puts crypto in a delicate position. We've also seen that institutional investors are watching closely, and their entry or exit can amplify moves. The development phase is all about understanding these dynamics and preparing for multiple scenarios. Will the Fed signal a dovish stance? Or will they maintain their hawkish tone to ensure inflation is truly under control? Each outcome has different implications for crypto. So, how do you navigate this uncertainty? The solution lies in being prepared and strategic. First, diversify your portfolio to include assets that are less correlated with the broader market, like stable coins or even precious metals. Second, consider dollar cost averaging. Invest a fixed amount at regular intervals to smooth out volatility. Third, keep an eye on the Fed statements and economic data releases, like the Consumer Price Index or the non-farm payrolls, to anticipate moves. Finally, set clear stop-loss orders to protect your capital. But the most important thing is to have a plan. Decide in advance what you'll do in different scenarios: if the Fed cuts rates, if they hold, or if they hike. This way, you're not making emotional decisions in the heat of the moment. Remember, the goal is to survive the volatility and position yourself for the long term. Crypto has survived many Fed cycles before, and it will likely survive this one too. The key is to stay informed and adapt. In the end, the Fed's next move is a double-edged sword. It could crush crypto by tightening liquidity further, or it could skyrocket it by signaling a more accommodative stance. But regardless of the outcome, you have the power to protect your investments. We've laid out the problem, the historical context, and the strategies to handle it. Now, it's up to you to take action. Don't let fear dictate your decisions. Instead, use this knowledge to make informed choices. If you found this breakdown helpful, give it a thumbs up and subscribe for more crypto and finance content. And let me know in the comments, what do you think the Fed will do? I'd love to hear your predictions. Thanks for watching, and I'll see you in the next one.